today we are going to focus on the parent company, and I'm very pleased and honored to have Steve Allan, the CEO of the parent company, joining us today, and we'll have a good conversation about your organization, the way forward, and everything that's going on around it in the ecosystem. Steve, welcome to Neo Spotlight.
Thank you. Thanks for having me. Looking forward to the discussion today.
Let's maybe start with the basics. So the parent company, largest vertically integrated omni-channel cannabis platform in California. I think that's a good high-level description of the company. But I'm sure we have some people in our audience today that are maybe new to the company or don't know the company. Could you give us a bit of a general overview of the company and where its focus is, what its high-level business model is, so that everyone gets a bit of a good understanding of the parent company?
Yeah, absolutely. So as you know, and many folks know, the parent company really came into existence this past January as a combination between a SPAC, Subversive Capital, which acquired 3 different operating companies in California, which really gave it a very robust, vertically integrated platform. What we mean by vertically integrated is we grow the plants, we harvest the plants, we extract the plants, we create all the products from the materials that we have from there within our own facilities. We distribute it, and we also sell it directly to the consumer, both from a retail and delivery. So when we say omni-channel, it basically means that we want to provide cannabis on your terms as a consumer. So whether you want to buy it online or in real life, if you want it delivered to your house, or you want to have curbside pickup, really providing as many options as possible for you to get the cleanest, highest value, best quality that you can get out there in cannabis. And so that's really what we mean by that. Our goal is to really take in the California market, which is still a highly fragmented market. While it definitely was a leader from a medical perspective, having had 22 years of medical before recreational, really the introduction of this framework has left California a little bit fragmented. And so a large portion of what our focus is to take this infrastructure that we've combined with these 3 different entities. We really focused on how we were integrating those companies, shedding redundant assets. So we shut down 3 facilities. We actually went through a personnel rationalization that had us separate from about 10% of our personnel expense. And then we really focused on how we make sure we shore up the remainder of it. So we entered into some cultivation agreements and M&A agreements around cultivation, helped shore up the components that we did not have in-house already. We had a robust indoor facility, but did not have greenhouse and outdoor. We've been sourcing separately from that. So now that we've done that, our real focus is how we go through now addressing the direct-to-consumer or the retail and delivery side of the house. California really does suffer from an access problem. The per capita dispensaries is similar to Florida at about 1/10 of Colorado. So we really are focusing on how we're helping to solve that problem and issue for California consumers so they can easily access their cannabis from legal channels. And so that's really, when you look at it, we spent the first 100 days, integrating, getting our cultivation shored up. We're spending the next 100 days really helping to build out the touch points from a direct-to-consumer and retail experience, so that we can then really help to bring forth all those products that we've been developing and putting out in the wholesale channel and putting it directly to the consumer.
So would you say that your focus today is really going to be distribution and optimizing distribution? Is that a fair way to say it, having set up the entire foundation to build upon?
Yeah, so I'll just do a slight clarification, which is distribution is typically for B2B. And while we do self-distribute, we don't do that for other companies. We actually call it direct-to-consumer, or B2C is really where our focus is. How are we getting the products into the hands of the consumer? So yes, that will be our primary focal point here over the remainder of Q2 and into Q3.
Yeah, and yeah, I probably use the word distribution in a more generic way, but thank you for clarifying that. How would you say is the company doing today overall from a financial perspective? And I'm looking at one of the questions that came in. There were a question around some very strong margins that you have in some of the product lines. Could you give a little bit of feedback on how the company is doing overall financially? Of course, we cannot share anything that is material or that but we can leverage some of the past information, obviously, that is there, and then get a bit of a feeling on how things are going in general.
Yeah, absolutely. So when we look at it, really from a financial perspective, you can talk about the income statement and the balance sheet. From a balance sheet perspective, it is the strongest balance sheet in all of California. We have over $250 million of cash on balance sheet. We have great opportunities to leverage that cash specifically for organic and inorganic growth. When you look at the California market, really it's an undercapitalized market for the size of the market, the amount of operators here, really the amount of capital that's been infused to it, actually pales in comparison to what you see with some of these other, what I'll call quote unquote newer states, or states that maybe have not embraced either a medical or recreational cannabis for as long of a history as California has, but have done so more so over the last half decade. And so when we look at it from that perspective, it really is a key competitive advantage that we have, is our ability to step on the accelerator for growth, and for us to have the flexibility to be able to go through an acquisition framework that we can use equity to do transactions, we can use cash to do transactions. We have the flexibility, unlike most, to really mix and match those in any way that helps us to close the deals on the right assets for the right prices. And again, when we do go through that inorganic perspective, really we're looking at what are things that we can take operationally and improve them. What is it that's accretive to our shareholders now? And what is it that creates long-term value within the California market, both under the current framework and under what a post-federal legalization within the United States looks like. We don't know when the timing is, but we know it's a matter of a when, not if, at this point in time. So really, that's the way we look at the balance sheet. From an income statement perspective, really we've been continuing to grow and optimize the business as best we can. Again, we're executing against what those plans look like. This really is a matter of how we combine that organic with that inorganic to really help drive that on a go-forward basis. If you wanted to do strictly organic growth within California, that's a possibility. It's just that time frame is typically about 18 to 24 months to secure those new licenses, to build out those new locations and do that. So while we are doing that, we are trying to couple that with the inorganic side and really look at these operators who have worked hard to get their locations up and running, but recognize that cannabis is tough, right? That there's high costs of compliance, there's regulatory issues associated with it. You got overhang of a 280E tax framework that still exists here in the U.S., which is quite archaic and hopefully gets dealt with here shortly. But this really also provides opportunity for these retailers to hitch their wagons to somebody else. And really, scale will matter within California. Again, like I said, the cost of the infrastructure and just the fixed costs associated with doing business in such a highly regulated industry really just causes a movement towards that. And so we will see rapid consolidation. We've already been seeing some rapid consolidation in the space, and that will just continue to accelerate. And so for these smaller players, it's really them selecting who they want to join forces with.
Yep, and I think it's important because sometimes people forget about that. They see information and they forget it. But you have an extremely solid balance sheet, and I think that is a token of stability and represents an incredible opportunity, of course, going forward.
Yeah, no, it definitely does, and trust me, I hear plenty from folks saying you have that balance sheet, go use it, go use it, go use it, and what I just want to reinforce is, we're in this for the long term, right? We really want to be a 100-year cannabis company. We really see this becoming cannabis becoming larger than alcohol, larger than a lot of these consumer product good categories. And so we're trying to build that foundation, from that bottom up and doing it in the right way. And so we are siphoning through hundreds of companies, going through very robust diligence in what that process looks like. Like I said, it has to be something that we can work with operationally, that's accretive and that drives long-term value. And without that combination, we're not going to just go do a transaction to do a transaction. We really are focused on that growth. And so we keep digging in, we keep working hard on that. And, we're going to be excited to hopefully have a couple of announcements coming up here over the remainder of this quarter and into Q3. But really, that balance sheet is a tremendous competitive advantage in the current landscape.
Remainder of this quarter, Steve, there's only 2 weeks left. That is,
well, as you know, M&A is nearly impossible to predict exactly when it closes, because you got to get through the diligence on it, right? And we won't shortcut any of the diligence on any of the deals that we're doing, and we will walk away at the 11th and a half hour and have done so, right? Because it has to be that right fit. And so from that perspective, yes, there could be something that happens this quarter. I can't promise it, because again, until the diligence is done, it's not done, right? Until the deal is inked and out the door and announced, it's not completed. So we'll continue to work hard on doing that, and hopeful that we'll have some of those coming out here before the end of the quarter. But whether it's by June 30th or whether it's in July, really is not important. It's about making sure we have those right assets to bring into our ecosystem.
No, and I think those comments, and I can just see indeed people around you asking about how are you putting your capital and your equity at work. I think it's very reassuring to hear what you say, because I've seen this business. I'm sure you've seen in this business a lot of deals where it's all about noise. Trying to make noise, and then you look at the deal and you're going like, why the hell did they do that? So I think very reassuring to hear you saying that, and I think that your investors and your shareholders should be very pleased with that. Moving to and then there's a couple of questions here that I will come back to at a later stage. They relate a bit to they're coming in large quantities. I certainly see that I will come back to afterwards. But one question is I would like to zoom in with you briefly, and you touched upon it. Competition. You say, California is a very fragmented market. There's a couple of larger players that are present over there. What would you say is the big differentiator? What are the key elements that really make you different from your competitors in that space? I think you covered already some of them in what you said earlier, but it's probably worthwhile to briefly zoom in on that so that people really understand what makes you unique and what makes you different.
Yeah, no, it's a great point, and I'll try to touch on some newer components and fold in some things we've already addressed. I think one of the things that's a key critical differentiator is that we have built this business for the long term, as I discussed. And so that meant that we've really invested in the systems and infrastructure for scale. And so by doing that, that really puts us in a unique position to be able to actually ingest these acquisitions and integrate them in to ensure that we are maximizing their impact and efficiency, really right away. And I think that's unique because, again, when I look around most of the competition within California, there's been a lot of, how do I just get to this next milestone? How do I just get to that next level? And we really had the advantage from the very beginning with the separate boards of directors that we had of the different component companies before we brought them all together that really said this is about building for scale. And so I think really that's one of those things that it's not sexy. It doesn't show up in the headlines. It's not something that people really talk about, but it's what makes businesses fail or succeed. How well have you built the infrastructure to be able to execute and scale? Because if you haven't done so, then eventually you will falter under your own weight. And when you do that, the ramifications are massive. And so for us, it really was about how we built that. That second component we discussed was the balance sheet, right? Because we have that infrastructure and foundation. Now you add in that balance sheet, we're able to be, fiduciary stewards of the capital that is on that balance sheet. That's not our capital, that's our shareholders' capital, right? And we need to make sure that we're taking and executing that as best as possible to be able to fulfill the vision that we've set out there, which is really to be one of the leading, if not the leading cannabis player in the leading cannabis market in the world, which is California. As you know, north of the border there, California's market is bigger than the entirety of Canada's marketplace. We're talking about a single state, and that's all prior to any sort of federal changes that could happen within the United States. So really our focus is about being on California, executing against what the strategy in California is. That strategy has not changed. It's just something we continue to move through in a very steadfast and detailed way. And as we go through and do that, we are developing the brands, we're developing the distribution points, we're developing the retail access points. We're really solving for a lot of the problems that do exist in cannabis today around access and awareness. We're doing that by introducing more stores and more delivery outposts. We're doing that by leveraging our partnerships with Rock Nation and Jay-Z to really get more communicated out there. We're really doing that in a way that allows cannabis itself to be elevated in the mindset, because we have to remember we're still coming out of a 50-year war on drugs and just say no, an egg in a frying pan, and really that is a tremendous responsibility for us to be able to do, and to do all of that while also focusing on how we're developing, more equity within the ecosystem. We are on the forefront of generational wealth creation here, and so for us, it's also about doing things the right way. So it's not just about building the right infrastructure and making sure that we're following all the rules and regulations and ensuring that we're providing consumers with the best product and best experience. It's also about how we're helping to diversify the ecosystem early on in its process, so that as the cannabis ecosystem grows, we can have a more diverse and more equitable ecosystem out there that grows together with it. And that's something we haven't really seen take place in different other industries that have had this same type of 2, 3, 4, 5 decades worth of growth sitting in front of it. And we know that we need to act now to be able to do that. And so that's another key component and pillar of what we're looking to do as an organization.
Tell us a little bit more about that. What you are doing exactly from that perspective.
Yeah, so we've announced that we have a social equity fund. And It's a $10 million initial seeded fund, and then 2% of net income on a go-forward basis. And it's really focused, and to be clear, it is a corporate venture capital fund. So it is focused on strategic investments. While there's a small allocation that is focused on grants and donations towards different organizations that are really helping to right some of the wrongs and help on job development training and helping to get business cases and business plans and applications done. Really, the preponderance of it is where we see the biggest gap that exists, which is these cities and states and counties are doing an incredible job of developing social equity frameworks where they're providing opportunities for those that were most negatively impacted by the war on drugs to benefit from what is this 180-degree twist to change from what was marijuana and cannabis are bad to, hey, this is great. It creates jobs and tax revenues and helps with pain, sleep, anxiety, relaxation in a way that's organic and non-addictive and non-synthetic. And so when you look at that, there still is a gap that exists, which is where do you source the funding? Because it still costs $250,000 to $1 million to get one of these businesses off the ground, even on a small kind of mom and pop perspective of it. And because it is federally illegal down south of the border for you here, you can't access traditional funding. So it really is tied up within high net worth individuals. And that traditionally does not have a cross section. So we've really been focusing on that. We've made our first 2 investments. We made one in a retail location down in Los Angeles. We made another one that was announced yesterday into an incredible brand that Jesse's created, Peaks, which has high quality flower. We actually carry it in our stores as well. It's an awesome product. But really, he just need access to working capital to grow his business.
Yeah.
His demand was outstripping his supply, and we really need to step in and help on that. And again, let's be clear. We recognize that $10 million is a drop in the collective bucket. Right? We need $1 billion for this. And while we want to continue to grow out our fund and continue to make an impact, really want it to serve as a beacon or a shining example to others to be able to follow, to help fill what that funding void is, to be able to help grow these businesses.
I think you make the point, and that it is very unique, and hats off for doing that. I definitely think it tells a lot about the values behind the organization. A couple of more generic questions. You briefly touch upon, you never know what's going to happen with the regulatory environment, but could you share a little bit your views and your thoughts around that, and how you expect, it will impact you, and then secondly, also in the more general view of things, because it's more about look into the future. Today, as you very clearly explained, all your focus is on executing on a plan in California and delivering upon the commitments. But is there a longer term view to, it's one of the questions that came up, is there a longer term view to go beyond California? So two questions really.
Yeah, no, they really are intertwined though. So I'm glad you asked the two of them together, right? When we look out there long term, we see cannabis as similar to any other, CPG out there. It's a consumable, right? It happens to be a consumable that was mistakenly or erroneously outlawed for multiple decades. But besides that, it is really just a plant that's grown in the ground that's been translated into a consumable product that really helps to meet various need states. I mean, you could say the same about alcohol. You could say the same about breakfast cereals, right? Realize they're all solving for a particular need state, and it's coming from something that we grow out there. So when we look at it, we know that at the end of the day, it will be a brand play. It will be brands that win within cannabis, just like they have in these other areas. And so we always have an eye towards brand and how we're developing brand. It's just in the early innings of what this industry is, you do have to create a little bit of self-reliance. And that's why it is an advantage to be vertically integrated. That's why you've seen that be the playbook for pretty much every large cannabis company out there, has been, I need to control my supply and demand chains to be able to execute against this, because the ecosystem itself isn't evolved enough. When there is a change at a federal level, we will start to see an increase in specialization. We will start to see cultivation go to the best and brightest farmers out there. We will see distribution go to those that understand distribution thoroughly. We'll see retail, depending on how local level regulations work out, similarly make shifts towards that. There'll always be kind of niche or smaller players that fall within different components of it, but the largest swath, kind of that 80-20 rule, right? 80% of that market will really fall into those categories where it starts to become specialized. That's not the case today, and that won't be until there's a change federally. But we always have to have that eye towards that long term, that 100 years. And what I can tell you is a decade from now, it will be brand that wins within this space. It will not necessarily be the rest of the supply chain as that supply chain matures. Do I know exactly what federal changes are going to look like? No. Have I built my business model around trying to predict, and by predict, I mean guess, what is going to happen from a political perspective? No. I mean, it's insane to build your business model around politicians acting in a way that you would say is logical and predictable. Do I believe that there's a sea change that's happened? Yes. And public opinion is over 2/3 supporting cannabis legalization. You've got multi-billion-dollar businesses. There's probably over $100 billion worth of market cap that exists for U.S. cannabis companies. So really, this is just about the political side of the house catching up, which it will do. I mean, traditionally has always trailed when you talk about building up the legs of a stool to what actually brings something to the forefront. Like that's going to come, but that's part of our advantage being in California, is that it is a market that has no clear winner today. We are in the best position to be able to win within California. And oh, by the way, it's the largest market in the entire world. So we do have an incredible opportunity, just even if we focus solely on California. That being said, we've got national and global aspirations. And so when we look at it, the reality is that the way that the market exists today, going and building out redundant assets in every single state and every single country, around the globe, just is not really feasible. There's not access to that capital. The cost of capital is too expensive. And oh, by the way, a lot of other people have done that. There's been tens of billions of dollars invested into building cannabis infrastructure within the current frameworks that exist. And so we're looking to partner and leverage those, because we know that at the end of the day, in a lot of those areas where they've been more supply constrained relative to their demand, they haven't focused as much on brand or product quality. Meanwhile, where we're at in California, we've had to focus very much on brand and product quality. And we think that's something that gives us a competitive advantage here. And when you kind of take the old cliche, if you can do it here, you can do it anywhere. This may not be New York, but from cannabis, it is California. If you can do it here, you can do it anywhere. Now, that being said, we also do believe that brand is born, raised, and built out of either California or New York when it's about the United States. And so New York is that next area that we will look to go into. And it's an exciting opportunity. I'm really thrilled at the way that New York has taken a very progressive agenda around this, really incorporating social equity at a level that no other state has done yet. And I think it's serving as an example to others. And I'm hopeful states like California will go amend their rules to ensure that they're creating the right kind of frameworks to be able to allow that to take place. But New York is probably the only other market that we would look at building substantial infrastructure, because of our belief that you do have to build your brands there. And in today's nascent market, to build those brands, you often have to have the actual fixed infrastructure, or you've got to have a partnership with a very strong player there that allows you to do it. So that's really what we're looking at doing. Outside of those areas, we're really taking an asset light approach. And what we mean by that is really focusing on how we go find a partner. We help them with SOPs and SLAs and how they're able to take and build the products that we've created, how we help them with those genetics, help them with the manufacturing, the form factors, really helping to elevate their product qualities, but doing it under our brand name. And then we're licensing them that brand name to be able to sell those goods within those specific geographies. And then what we'll focus our efforts is really on the marketing side of the house, and how are we helping to drive sales towards that. And in some cases, we'll go one step lower than that and actually get involved directly in the retail and delivery side of the house, because we do have an expertise there. And really the source of education for a lot of consumers today is that touch point. It's either that dispensary or that online chat or that online video consultation that they're looking to do, because they still need to learn about cannabis. It's still hard to actually learn about it in today's day and age. And so we need to be able to help with that. And so when we're trying to help the consumer become more educated, we'll try to do that whether we can just from a marketing education digital perspective, but we also recognize in some markets there'll be opportunities for us to establish a retail footprint, a delivery footprint, where we can help to control more of that consumer access to really control the consumer experience, as well as to ensure that they're getting the correct information in the correct way, so that they're educated and know exactly what their decision criteria looks like.
Steve, I love your no-nonsense approach and the clarity of your vision. Just thinking about the comments you made about the political environment and the political world, and not including that in your business plan, or not letting that drive your business plan. I think those are critical elements again that make you feel comfortable that there's some clear vision and a clear approach, and not influenced by uncontrollable factors around you. Now, what I would like to finish with is a question that came back quite a bit in the questions, and that is, the organization is a very solid organization. It has a clear plan. It's fully executing upon it. What about the stock price? What are your views, and what are your reactions on that? And then I would like to add a little component to it, because it's two elements that for me go together. As an investor, and I'm looking at the parent company today. I'm listening to you. I'm looking at the stock price. How should I react? Should I be waiting and seeing how things evolve? Should I step in? What would be your recommendation to investors and your views to shareholders? Taking into account everything you're doing, and then also looking at the stock price.
Yeah, I mean, so first and foremost, would just like to reiterate a little bit was discussed before, that we are taking a long-term focus. So obviously my viewpoint is going to be highly biased, that, for folks to sit there and understand that it does require patience, it does require time for execution on a vision and strategy that makes sense and that really drives that shareholder value. I absolutely understand that there's impatience around this, but we will always be biased towards a long-term focus versus a short-term focus. And I get that may be different than what you necessarily have in some other companies within this industry and within other industries, right, around this kind of 90-day sprint of quarter to quarter and really having almost a myopic focus on that. We clearly are focused on that. We clearly are executing against weekly, monthly, quarterly, semi-annual and annual targets and trying to drive towards that. But we also have an eye towards 2, 3, 4, 5, 10-year plans down the road. So it's how we balance those things together. Typically, if you see your stock go down, almost 50%, which is what's happened with our stock, you press a panic button, right? I mean, let's be clear, that's typically what the response would be. But we really, in taking that long-term focus, look at it and say, well, let's better understand kind of how we got to this and what intrinsically has happened. One, has the strategy changed, right? Was our strategy incorrect? And so we're being punished because we went executed against that and we're unsuccessful with it. No, right? The strategy is still the same. We're continuing to execute against it. Look, we just hit being public for 5 months on Tuesday of this past week. I know in cannabis that may feel like 5 years because it is a rapidly evolving industry, but it also takes time when you're going to build these things, to build them correctly and to do it. Rome wasn't built in a day, and the largest companies out there of the Googles or Facebooks or Teslas or whatever it is you want to get weren't built in 5 months. And so as we look at it, we understand that this is a longer term framework that we need to do, but the strategy hasn't changed. We're executing against that strategy. We have the tools to execute against it. We have the balance sheet to execute against it. We have the team to do that. So I'm very confident on what this looks like. And I think investors that are patient will see the rewards and benefit of that as we continue to execute over the next 100 days, next 6 months, next 2 years. And so it's really important from my perspective that investors understand that they're going to need to be patient if they want to fully reap the rewards. This isn't a matter of timing a market on when we execute around these things. The second component of it, which is a little more of a technical term, but the volume weighted average price. And so really what we're seeing within overall cannabis industry in general, but also specifically within our stock, is that the volumes being traded on a daily, weekly, monthly basis have been going down consistently from the beginning of the year to where we are today. And so when you see overall a decrease in the amount of demand for buying into the equity, whether that's our particular equity or whether that's other cannabis stocks equity out there, you tend to see downward pressure on the stock price. But when you take the volume weighted, and so you actually look at it and say, well, what's the price? The volume weighted price for our stock, where our shareholders currently hold it, is above $10, which means that the vast majority of them understand that this is a long-term play and that will drive forward. And I think as we continue to print quarters, as we continue to execute against the strategy, as we issue more and more press releases and announcements around the things that we are doing to execute, we'll start to see that demand grow for the stock. And then because you do have a lot of long-term holders of the stock, there really is relatively little float that's out there that's going to cause a lot of volatility. Trust me, I would definitely be hitting more of a panic button if we were doing $20-30 million worth of buy and sell transactions, and our stock was going down 50%. But because we're talking about things that are around $1 million, sub $2 million a day that's being transacted on a company that's at least according to market cap is worth around $600 million. It's really a very small amount of trading volume. So I would encourage people to be patient. I would encourage people to look at this as a buy opportunity rather than a panic button moment, because of the fact that the strategy hasn't changed and that the tools and resources still remain, and really just give us, the management team, an opportunity here to execute against what that strategy is and demonstrate it to you, just longer than the 120 days that we've been in existence.
Yeah, no, Steve, I totally agree with you. Like, we are a little bit living in a world, of everyone looking for short-term rewards. But what I will maybe leave as a message over here, and to those in the audience and people in general, you have to look at the fundamentals. The fundamentals is what is important. And when a price goes down in the circumstances that we see over here, because you're absolutely right. If you look at the volume traded in comparison to the size of the company, it's rather marginal, but it has an impact on the stock. But I think it's a period of opportunity. I think that is how people should look at this. This is a period of opportunity. And once to your point earlier, that you're going to come out with more and more news and more announcements, executing upon the plan, that is where you're going to see the turnaround taking place. But we have to be very careful about those short-term opportunities. I think we have to believe in the fundamentals. I see too many things happening in the markets today, that I'm not impressed with. I'm not happy with, where there's a lot of communication and information going around that is not correct, that is misinformation, and then you see all that volatility and short-term wins and stocks going up and then going down again dramatically afterwards. And by the way, the loser is always the same. It is those who are playing in on that fake information and who are hoping for those things to be true and to take place and to happen. I'm a big believer in fundamentals. I'm a big believer in long-term visions, and ultimately that is, as an investor, how you generate wealth. It's not by looking at short-term wins, but that is my thought, and that's a bit the vision that has driven this exchange in the way that it looks at listing companies and establishing partnerships with companies for long-term success. Thank you very much for your time. Thank you very much for all the information you shared, and definitely going to keep a very close eye on the progress and the next steps and the announcements. Whether this month or next month, to your point, doesn't really matter. But it's about executing on the basis of quality. So looking forward to that. Thank you, Steve, and also looking forward to the next opportunity to have an update conversation with you.
Yeah, no, appreciate you having me on here. Happy to be able to have these conversations. Look forward to it again. And for all those questions that did not get answered, whether you want to send them to the Neo Exchange or whether you want to send them to just ir@theparent.co, we can then answer those questions directly for you there as well. But appreciate everybody's time today and look forward to future conversations around it. And let us get back to executing over here.
Thank you, Steve. Thank you, everyone, and have a wonderful rest of the day.